as an auditor is professional skepticism. Remember, you are in the field work, you are trying to audit. So in professional skepticism actually means you as an auditor, because you are the most senior individual in that audit, you should ensure that you advise your audit staff to approach audit with an attitude of professional skepticism. Now, professional skepticism in auditing is an attitude that includes three things. One, a questioning mind. So as an auditor, you should always question. When you're approaching an audit area, maybe you're trying to audit cash, what should come into your mind? Or you're trying to audit receivables or cash, what should come to your mind is that people might be stealing, even though people look honest. And also, you should be alert to conditions that may indicate material misstatements due to fraud or error. So you should always be alert to areas which could lead to fraud or error. Like receivables, you know, somebody would steal. So receipts, people would forge receipts. And finally, you should assess your audit evidence, critical assessment of audit evidence, rather than accepting information at face value. So don't just say, when people tell you that this vehicle was bought at 2 million, then you're just happy. Okay. No. You have to go in the system and check. You can even go further and ask your suppliers. So that's what we mean by an attitude of professional skepticism. So a questioning mind, alert to conditions which may lead to fraud, and a critical assessment of audit evidence. Okay, now, examples of professional skepticism. In field work, there are 4 areas where we need to consider when we are looking at professional skepticism. Not only 4 areas, but these are the main areas. So things like fraud, things like going concern, things like impairment, and finally issues like receivables and revenue. In terms of fraud, as an auditor, you need to consider fraud and engagement team meetings. So as auditors, you're going to have an engagement team meeting where you're going to discuss how you're going to approach the audit. So during your discussions with your fellow team members, you need to highlight to them fraud issues. I need to remove this. So the second point says fraud must be considered regardless of how well the auditor knows the client. So don't say you have been auditing this company for the past 10 years. You still need to consider issues of fraud. Going concern. As auditor, you need to understand and be able to investigate whether the entity is going to continue on a going concern basis. The opposite of going concern is breakup basis. When an entity is not going to continue on a going concern basis, there's a chance that it can be broken up. So breakup basis means the entity will not continue in foreseeable future, in operation existence for foreseeable future. Now, going concern, we have got issues. We are going to look at going concern towards the end. In going concern, we look at issues like operating indicators, for example, lower profitability, financial indicators, decline in current ratio, for instance. So when these issues have arisen or are going to arise, you are supposed to document them as an auditor. Then impairment is also a crucial issue, because impairment is the way people use to reduce profits in the company, so that maybe they steal some money in the company. So as an auditor, you need to challenge the value of impairment and also the future cash flow assumption of assets. Once you see impairment 20 million, you have to challenge it. Let's see how we arrive at that figure. If you have knowledge of impairment, we say impairment is measured at the higher of the impairment is measured at the lower of recoverable amount and carrying amount, whereas the recoverable amount is the higher of value in use and fair value less cost to sell. So value in use is what you should be worried about. Value in use, it means the future cash flow that you estimate. So as an auditor, you need to doubt the estimates of future cash flows that the auditors have made. So you need to challenge the value of impairment. You also need to challenge the future cash flow assumptions. Revenue is going to increase by 100%. You need to challenge them. In terms of receivables and revenue, first you need to check whether the debts are recoverable. if there are any bad debts. And in terms of revenue, consider whether revenue is genuine and properly recognized. You know, some people can forge receipts. So that's some of the key issues you should consider during audit evidence gathering. You remember we have said in audit we are going to have an engagement team discussion, especially regarding issues of fraud. So you as the key staff, the most important staff in audit is the engagement partner. So if you are the engagement partner, your responsibility will be to ensure that there is quality audit carried out. So because you are a senior individual, you are going to delegate these tasks to some of their audit members. So you can delegate to the audit manager. The audit manager can even delegate to the audit senior. There are some audits where we can delegate to a sole practitioner. Some companies can operate individual as auditors. For example, I can have my smaller audit firm. Right? So I will not call myself as a partner, I can just call myself as an accountant. Or some will just call themselves as a partner. Even though they are operating as individuals, they can still call themselves as partners. But this is not common. It's just a note. This is just a point you should take note of. Now, the audit staff hierarchy. So the audit staff is as follows. The most senior individual is the engagement partner. So this is the individual who will be concluding on the audit reports. Then we have the audit manager. Below him there is the audit supervisor or audit seniors. Then finally we have got audit assistants. Some will call them as audit associates. And these associates can even be divided into two groups. Associate 1, associate 2. 1 with little experience, 2 who has gained some experiences, then the hierarchy goes on further. So at your level, you'll be either the audit manager or the audit senior sometimes. But sometimes they can put you in a decision where you're an audit engagement partner. So be prepared. That's why at this level you'll not be providing long answers or maybe operational answers like check this. No, you have to or inquire. You go for answers which are at senior level. Now we are still within the audit staff, the audit team. So we have said the responsibility of the engagement partner is to ensure there is quality. Now quality is into 4 areas. In the audit team management area, there are 4 areas we should look at. The first one is direction. All these aim at quality. Now, in terms of direction, it's the boss, and our boss is the audit partner. So if you are the boss, you are going to guide your audit team, starting from the manager up to the audit juniors or the associates. You are going to guide your audit team, and you are going to discuss with them significant risks with them. Remember last time we said significant risks include fraud, related party transactions, and user transactions. So you discuss with them those areas which are significant. In terms of supervision, the partner will still be responsible for supervision. So you supervise the whole audit. The whole audit. For example, you'll be asking feedback from the manager or senior to say how far have you gone to the audit, which issues are very critical, which areas have not been resolved from the previous audit, all those areas. However, the senior staff will be there to supervise the junior staff. So for example, the audit supervisor will be supervising the audit associates, while the audit manager will be supervising or be reviewing the work of the audit supervisor. In terms of review, you should make sure that before the audit report is signed, the partner, you as a partner, you need to confirm that sufficient appropriate audit evidence supports the opinion and review significant risks and judgment. What do we mean? If you say the financial limits are true and fair, make sure you have looked at enough evidence. For instance, we looked at an example of auditing the machinery. So you need to make sure that a valuer has been assessed. depreciations have been verified, impairments have been reviewed. So all those evidence should be collected. And you also need to make sure that all the significant risks have been resolved. And all items which require judgment have also been resolved, such as depreciation, impairment, allowance for doubtful debts. All these issues are dealt with. Consultations. Remember, in audit, we'll be dealing with some items where we don't have expertise. So where we are not sure, we can consult different individuals. We can consult management experts. Right? So difficult or undisputed issues must be discussed with appropriate experts and properly documented. So if you know you don't have knowledge about maybe tractors, you're auditing tractors, they're useful, you need to ask somebody who has knowledge in that area. Then you need to document that in this area we used an expert. Okay, I don't need this. The things have changed now, but I'll just say this chapter is key to your exam. So the chapter is key to your exam. Key exam area. We can just say is examinable. You always have a question here on audit evidence, so make sure you take the issue serious. So here, what we'll be looking at is the evidence gathering techniques. That's very important. Using computers or mostly data analytics, we'll look at that. Then we will now be auditing tangible assets, intangible assets, current assets, and many assets. This one is repeated, and remove it. Yeah, so this is what we'll be looking at in the next. So this is audit evidence part 1. Let's now go to the other parts.